All right, welcome back to another episode of Can an Income-Oriented Portfolio Sustain an Early Retirement? This is going to be update number 20 for June 2026. For those of you who joined for the first time, this is a series where I track my retirement. Basically, I track all the withdrawal, all the growth, of my income portfolio. The reason I started doing this is because back then when I decided I wanted to pull a trigger, I couldn't really find a lot of data regarding people who actually live off of the income portfolio. There were some, but there weren't a lot of them. A lot of them were more in terms of the accumulation phase. So I thought that, I'm gonna do this. I might as well track the data for just for educational purposes. Of course, this none of these is financial advice. I also track a different, like a popular ETF ticker like VFV, S&P 500, XEQT, and the Qs as well, just to kind of track to see how the strategy would have performed if I were to go a different route. Um, if you are curious about the journey, please check out the older video to see how it started and how's it going. With no further ado, I'm a little sick this week, so I'm not going to be trying not to go too long here. And with no further ado, let's go right into it. So I posted a Reddit post updating it last week, but I was coughing my lungs out, so I didn't decide to make a video until now. I'm still have a little itchy throat, but I'm gonna try to power through this quickly. As of last week, you can see that the portfolio kind of progressing nicely. In the beginning, when we first started this experiment, we were starting at about $870,000, and fast forward about 2 years later, we at about 1.22 million, which is going pretty well, I would say. But again, we've been going through a really good bull market. The true test is the longevity of the experiment, right? How it would perform, 5, 10 years, 20 years down the road, and that's where this experiment gonna be put through a test. Um, so this is what I post on Reddit. As you can see, the portfolio changed a little bit. Like I did exit off a lot of option position. I exited on the Amazon leaps. I readjusted Oracle leaps, and I know it's not shown here. I did sell some cover call on HYLD, which most likely going to be called away due to the recent market spike. Our portfolio definitely lagged behind the overall market this month because of if you follow the market, you know that Oracle took a big dump. They had a really rise into the earning, and after the earning, they kind of just dumped down. So in the end, they kind of stopped where they started. So the market really chugging along the past month, but Oracle kind of lagged behind. We also heavy in Amazon, which also kind of took a dump in the past month. I really don't want to say dump because overall, if you zoom out, it's not really anything. It's just kind of like just underperforming in the short term. I still really think that Amazon and Oracle has a pretty good, long-term prospect. I'm not going to go too much into it the because that is part of the margin account, which is supposed to be for like opportunity play. Income sidewise, everything is going nicely. We're still receiving all the dividends. A lot of expenses are in the past month, so I try to save as much cash as possible to build up the emergency fund, which so far been pretty lacking, sitting at 5.5K over here. Ideally, we want to be at about 20 to 30K just to kind of make sure that we have enough for the rainy day 6 months out to a year out. So far, this is work in progress. So this was as of last week, but let's go take a look at the current time. So this is as of today. A week later, market did rebound quite a bit. As of right now, it's a long weekend in the U.S. There was a lot of talk about the Strait of Hormuz opening and deal with Iran. Things are back and forth. You never know what's gonna happen. Um, in these kind of things, if you follow the headline, you're gonna think that everything's going bad, everything's going good. I think you just gotta try to like tune out and just stick with your plan, going with what you believe in and follow your conviction. Um, yeah, so far the portfolio is doing well. We did get quite a good growth in the past just a week alone, and in the long run, everything is going according to plan. We did receive quite a bit of option premium for the past month. Instead of withdrawing them out, I decided to reinvest it into the portfolio. So you can see that the number of QQY actually went up quite a bit from all the premium we received. June is trending to be a pretty good premium month as well, but those ones are just kind of on the side, so I'm not really going to dive too deep into it. Income side wise, I know that the portfolio in the living expense portion growing quite slowly, but because we are extracting 16% per year, and that is quite steep. In terms of income, I expect that And a lot of people also pointing this out to me that during the down market, this portfolio going to get hit the hardest just because of if you're taking out 16% during the big downturn, the income's going to really get hit, and the portfolio is really going to get hit as well just because of it's very exposed to the high beta names. And I totally agree. That is how it's going to be. I know that YTSL is quite a risky position, and this one is kind of like a moonshot position that I entered it long time ago. And so far, it hasn't performed the best, but so far it's been doing okay. So I'm going to leave it here for now. In the future, I may change it out of it to something a little bit more broader market based. QQY and JEPQ so far doing well, paying steadily. Um, okay, so now let's take a look at the experiment side. So basically, what I do is I track other portfolios like VFV, HYLD, XEQT, and QQC along when I first started the experiment to see how they would fare in the higher withdrawal scenario compared to a more income focused portfolio, right? So let's jump to VFV. VFV so far it's the least performing strategy out of all the portfolio I have shown before. But even then, it's still kind of chugging along quite nicely, sitting at 1.125 million. As you can see here, I track all the withdrawals since the very beginning. You can see the price over here and how much share I sold to fund the lifestyle, just hypothetical lifestyle. Because, like I said, right, a lot of people asking that are these all my portfolio? No, only the main portfolio. The rest are hypothetical to test how it would have performed. So these are the historical sale of VFV. I try to track the date, the amount, and the price so far. Since the beginning, we have sold 421 shares. A lot of people also mentioned that, like eventually you're going to be out of shares and the share price keep going down, which is true. It is by design of this strategy. The idea is that the VFV S&P 500 price will rise more than the amount you withdraw, and eventually the share price you have to sell will slowly decrease. And then, let's say 30 years down the road, you may only have to sell 2 shares per month, 1 share per month, etc., etc. And that's the idea of this strategy. Next is the HYLD portfolio. For those of you not aware, this is basically um, a US concentrated 25% leverage with corporate call layer. It's been quite popular ETF. Everyone consider it quite stable for income. I don't personally invest in this, but I thought that it was a popular ticker, so I thought I would kind of include it here in the experiment. HYLD so far performed quite nicely, actually. Quite a surprise. It actually performed quite better than VFV. It trailed behind quite a bit, and right now, and then recently, I think 6 months ago, it's passed VFV and starting making a bigger gap in performance. HYLD, it's opposite of VFV in terms of the strategy because it pays so much. I actually have to slap a small tax percent on it just to kind of keep it fair. And then again, because it pays a lot more than I actually need in my day-to-day life, instead of selling share, I end up having to buy more shares. And you can see here the historical share purchase here. So far, since the beginning, I sold about 6,870 shares. No, sorry, I bought almost 7,000 shares since the beginning of the experiment. And then so far, this portfolio is progressed quite nicely. Honestly, I know that cover call cap upside, but this one definitely performed a lot better than expected. Despite the cap upside, I know that it is leverage, but in the end, it's still I expected it to perform less than VFV, but this one definitely a surprise. Another big surprise that if you follow the series, you probably know that XEQT has been performing quite spectacularly throughout the downturn and also have a good upside as well. In terms of risk reward, again, this is probably the best one so far in the past 2 years of experiment, sitting at 1.2 million. XUT is honestly it's a little bit of a pain in the ass to track because it pays quarterly and payment is kind of fluctuate as you can see in the comment over here. So sometimes I have to sell shares, sometimes I have to buy shares. It's really kind of back and forth a little bit. But so far, this one also did really well. I'll show you the side-by-side graph later, and you will see that XEQT actually has the lowest volatility. But before that, let's go to the QQC, which is the latest addition to this experiment. QQC, it's for those of you who don't know, is a Nasdaq and index. Nasdaq is quite heavily invested in tech, and tech's been booming. Nasdaq has exploded. So we are sitting at 1.32 million. It's definitely the best performing portfolio so far. Um, Before the Oracle dump, we did outperform Nasdaq for a little bit, but not after the big drop in Oracle and Amazon, and we are heavily invested in those. So that's where we are right now. Again, Nasdaq so far performing really well. So far in this portfolio, we have sold 1,940 shares since the beginning of the experiment. Definitely the best performing asset, but it also come with the highest volatility because of a lot of tech names are very high beta. So when the market move up, it's going to move up more than the market. By market, I mean like S&P 500, right? And then when it moved down, it's also going to move down a lot more aggressive. Okay, let's take a look at the side-by-side data. Sorry if I keep coughing. It's just my throat is not fully healed yet, so I'm trying to power through here. So this is I started the experiment on my main portfolio actually back in I think about June of 2024, but I started seriously tracking data in the November of 2024. So when at the time I start tracking, we're starting at 932,000, and then this is up to date number. We are sitting at this amount over here. As you can see, XEQT performing the best, VFV unfortunately performing the worst, and then we are trailing behind, and also XEQT and HYLD as well. If you're looking at the graph over here, you can see that the yellow line XEQT here perform with the least volatility, and the QQC, the blue line, no, sorry, the QQC, the orange line, and our portfolio on the blue line are performing the best because we are also quite concentrated, and QQCs are very concentrated in tech. This is the amount that we have withdrawn since the start of tracking. So far, we have withdrawn 89,000 out of every portfolio. So all the withdrawals some match across our portfolio to see how they would have performed in this experiment. All right, so that is the data presented. Um, I haven't showed this in a while, so let's take a look at the main. So this is where I do month-over-month data and also the goals that I have for the year. And this is the total return for this year as well. In 2025, we did quite well. We outperformed the market by a decent amount. And in 2026, so far we're doing okay. You know, we're lacking behind QQC, but so far we are ahead of S&P 500. Of course, you know, it's easy to say that we are doing better than S&P 500 in the short term. S&P 500 is called a gold standard for a reason, so I wouldn't really take this as like a solid piece of data or something. The hope is that it will be more a better data the longer time we have this experiment going, and in 10 years maybe we can look back and see some cool graph or something like that. eBay listing, we actually have something sold yesterday, which is very good. You know, we sold. I used to work in a lot of I used to wear a lot of suits, and now that I don't work anymore, I have to try to sell them off a little bit to try to recoup some money because it's just gonna be sitting there. So far it's going well. You know, maybe sold 1 or 2 pieces every quarter, which is is something. The coffee money or something like that. Emergency fund, we are heavily behind on emergency fund because we have so many expenses came up in the past month. Duolingo going well. Reading book also quite lagging behind, being so busy. I mean, I know it's excuses, but with so many news and stuff that I want to keep track of, I don't have a lot of time to kind of sit there reading books, and my mind just keep running. It's hard to find time to sit down and concentrate. Okay, so that's it for the data. Life stuff. I wish I had better news. You know, I've been sick, and then for those of you who follow the journey, you know that my mom have been sick as well. She received a bone marrow transplant back in February, and after 100 days, we did a biopsy to see how her bone marrow cells are, if there's any cancer cell left. And unfortunately, it hasn't been good. Like it hasn't been good. They still found cancer cell, and then so basically the transplant wasn't successful, unfortunately. Um, so doctor suggests that she's been after the transplant, she's been on this drug called like I think tacrolimus. Basically, what it does is that it suppress her immune system to make sure that they don't attack the bone marrow that she received from a donor. So now the the hope is that they're gonna phase her off tacrolimus to hopefully so her immune system start to be active again and hopefully can fight off the cancer cells. I know it is a little bit of a long shot, but they said that there's a precedent before that it happened, so it's a little bit of a long shot. So we're just kind of hoping for the best. You know, it's I know I hammer this point down every time is that you can't take life for granted, right? You can aim for your goal, but you gotta enjoy the journey along the way. Again, if you watched my video before, you probably hear this like 50 million times. My mom was a hard worker, never called in sick unless she has to. She was supposed to retire basically this year, and just right before retirement, hit with cancer. So now you can't really enjoy retirement or the plan that you had. Unfortunately, kind of thrown out the window. So it's just a reminder that you can't take your health for granted. You gotta take care of your health. Money is one thing, but time with loved ones is priceless. And yeah, sorry, it's a little bit shorter this time. I just gonna probably gonna go lie down and try to recall my voice. Hopefully everyone is doing well, healthy, have a good time market, have a good return. I will see you on the next one. See ya.